Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst, Curtis Scouten here, jumping into the charts on this August 11th, touching on the S&P, the NASDAQ, the 10-year yields, also gold, the dollar, and basically I think the hot topic of the day today is mainly what yields are doing in my opinions, which are going to naturally have a major impact over the coming days and weeks in terms of how assets are priced. And certainly I do think we're going to be going through more compression in valuations. And naturally, starting with the S&P 500 here, you can see we're coming very close to the 200 daily moving average. And the interesting thing here is that we've tagged that 50% retrace. That was kind of like your major bear market resistance, where that's going to be the first big levels for the bulls to try to recapture this market and send it in an uptrend. And if they don't, then it certainly looks like the bears are going to take this for another leg lower, and it looks to be that it potentially could be, yet again, we're starting the next down leg in the markets. So the reason the 50% retrace is so important is because if you look at it from the high all the way up here around the 476 area to the low to the 360, and now we're trading right at that 50% center point. So it's kind of like a tug of war. Who's going to win? Are the bears to the downside going to pull this market lower, or are the bulls going to be moving this market higher? Based off of this chart pattern and all of the macroeconomic factors that I can think of and take into account, I think it's definitely more likely that this market trends lower. Now, we could chop for a little bit before ultimately breaking down, but I think naturally you have to assume that the bears are going to win this just due to the overall negative headwinds for the market. And the major thing that I think to look at is overall, I mean, this was pretty impressive because you had a gap up on, let me just go with the intraday action, shall we? So here's your pre-market. You had a nice gap up, and then the float just continued pre-market, had a slight pullback on the opening candle, had a nice little reversal, made a new high, and then the collapse just started coming in. And the intraday collapse, there was no real signals other than if you look on the daily chart, I'll show you where the resistance point has come in. But if you look at this collapse and this reversal, this is kind of what you call a gap and crack. And whenever you see a price rally firmly into a level and then completely reverse, and actually I believe, let me see if we closed negative on the day. We actually, believe it or not, we closed 0% flat on the day. In the post market here, we do have a couple of candles that are turning it positive, but if you look at the full trading day, we closed exactly flat. So whenever you gap up and then reverse all those gains, that's never a good sign for the bullish momentum. Now, we do have to consider that options X is starting next week, which generally you can start to see a little bit of manipulation. And the reason I think that the markets can be a little bit more manipulated in this time frame and seasonal period is for simply the volume, 48 million. If you look at these 6 last candle volume candles, they're disgustingly light. And whenever you have light volume flows into the market, it means there's less activity. So therefore, it's easier to move a stock in a particular direction, especially in the short term, like the after hours market over here. So one of the reasons why we stopped out where we did is if you simply take a trendline tool and draw it all the way across, you'll notice we hit that pretty much that resistance over here. We did pierce it, and then you reversed off of that level. So naturally assuming, and look at the major resistance level, one of the reasons that's so key, and despite there were a lot of bulls trying to chase this gap, because naturally gaps are very powerful, but volume analysis and trends is also very powerful. And when you look at this bar over here, this was one of your higher volume days back in May. You traded over 172 million. It was an extreme amount of volume. So for you to naturally pierce that in first of all, in an extended move already and one shot is very difficult to do, at least the first 1 to 2 times. But overall, you should try to see consolidation. The interesting thing is that you have not confirmed a breakout above this 50% retrace line, this white line over here. So that is clear resistance. One of the beautiful charts I want to show you is the IWM, the Russell 2000, comprising of the 2000 small caps. This daily chart is even fascinating because the Russell has had the most relative strength out of all the indices, meaning all the small caps have been bouncing tremendously, and they certainly have. have. Some are up 50, 60, 70, 100% from the lows or more, and you've started to see that frothiness come back into especially some of those meme stock plays. And that's why the Russell has outperformed the S&P and the NASDAQ. And specifically, the Russell's very intriguing because you just tagged the daily 200 moving average and reversed off it like a brick wall. So that is very, very interesting to note and see. The Russell has clearly had a massive, massive move to the upside. An important trend line which we're going to be watching is this level over here. Are we going to keep this impeccable rally to the upside going? This vertical degree in nature is a very, very tough one to essentially maintain, because it means you need more and more and more money flow into the markets to keep this trajectory going up and up. And when you're in a quantitative tightening cycle, especially when that supposed to start full force next month, well, basically in 2.5 weeks, that could be proving a challenge for the overall markets to find that increased money flow to at least maintain this type of trajectory. This bullish trajectory. Now, mind you, the markets did come from an oversold level, but to maintain that steepness in nature increase is very, very difficult. And mathematically, the odds tend to overall change the higher and higher you go. So we've clearly hit major resistance. Markets have filled key technical gaps on the Russell. You did have a minor one over here as well, which you can see you reversed and closed off of. So that reversal candle is good to see. You still did finish slightly positive on the Russell, up 0.37%. Let's just take a look at the NASDAQ. NASDAQ daily chart has tried to break out of this channel. And the interesting thing, let's just go over this. So you came up here, big impulse bar. You tried breaking out of this channel, had a pullback, and then you had another test of that channel, had a nice reversal off that channel, made a little bit of a lower low, but still kept inside this impulse move up. And then you started challenging this, and you've gapped up, and you actually broke out on this candle, and it looked like you were going to confirm today by being all the way up here around the 331 level, clear, higher than that previous green candle closed there at 326. But now you've reversed and closed back below pretty much yesterday as well. So that's never a good sign to see for the indices. Now the big question is this just going to be a short-term pullback of consolidation before breaking up or moving lower? We will have to see, but if you start failing at these levels multiple times and start trading below key levels like this red line, or also this particular steep upslope speed line, that's going to be your levels to really, really watch on the charts. So let's continue to see how the NASDAQ performs. You did also fill this key technical gap, which we were watching for a while. So that is something to note as well, that you have filled key levels, you've had a nasty reversal, and the NASDAQ did finish down just over 0.5% on the day. The big mover on the day, which we will discuss, and one of the things that we have been preaching and preparing everybody for in our service here, is bonds. Bonds. We sold our UBT a while ago, and it's been fluctuating and teetering in and around that area in which we sold. And one of the reasons we've sold that is because you had a failed breakdown. When we've discussed this topping formation, yes, it triggered, so it opened the probabilities up to a deep move down to around 2%. However, yields were able to recapture that level and confirm above it, so they've therefore negated this head and shoulders topping formation. And we've discussed this, that the biggest moves often come from when the pattern fails. So the pattern we were originally analyzing was this head and shoulders, which favors a downside move if triggered, and it was, but that has failed, which now means that the yields have the power to start challenging up at least to the 3% mark. And let me just tell you, when this reaches to the 3% mark, or if it does, which you can clearly see we have a short minor term breakout, will tomorrow be a confirmation day for yields? If it closes above, absolutely, then it confirms the likelihood of a breakout and yields is on, and that signals that the overall media that was portraying the bond market to be wrong and portraying the bond market to be portraying that the Fed is done tightening, the Fed is done raising rates, could potentially be wrong. I've heard a lot of people discussing, especially on mainstream, that the last 7 times that the bond market said the Fed pivoted. Well, Each of those times, the caveat was that there was no inflation, especially 4.5 times the base rate of what the Central Bank of the United States of America expects, which is 2%, which is a joke, a laughable joke. So clear power move in yields. The volatility in the bond market continues, 3.88%. And with yields, that's certainly going to put pressure. If we can get a sustained breakout in yields, I think our shorts will be off to the races, because that will put a sustained amount of pressure on tech. It's going to put pressure on utilities. It's going to put pressure on the overall markets, and certainly things like real estate once again. So let's watch that carefully. I mean, discussing the ITB, which we are short, which is yields, you filled a key technical gap there. You've come up to test the top of this range. This is a powerful parallel channel range. Pivot to breakout zone, to pivot, and look what you just tested today, but you've had a beautiful reversal, basically a daily topping tail over there, but you still finish positive on the day. So let's just continue to see how the ITB performs. But with higher increased yields, this should start to falter as the incentive for builders to build basically wanes very quickly. Let's take a look at gold. Gold overall is just in a form of consolidation. Very healthy price action, if you ask me. One of the reasons I say it's healthy is despite gold being down, this is complete, very early, but complete bullish formation starting to occur. Look where you're trading above. You're trading above this reversal candle, which was your big resistance there, and you're right along this chop over here. Just so happens to be the daily 50 moving average. Also the top of our original parallel channel. So even if we float down over here to about 1758, which could be the case in the event that yields start pushing up and giving the dollar maybe some short-term reprieve to go higher, if this floats down here, this would still be consolidation. The big level that we want to see is if gold actually continues to basically consolidate in between this wide range green bar over here. That's going to be our big level, and so far we are holding that to a T, and it is bullish. Let's give it another few days to see the price action, but overall gold has tagged the 1805 resistance level, the resistance level that we have been discussing for quite some time on all of our videos. Tagged that to a T, has reversed, and now we want to see consolidation, because I believe that the next level that we can take out, if we can challenge this 1805 level, then we can certainly start moving up to these wicks around the 1838, just below our 200 day. This 200 day isn't sloping down yet. It's starting to come around, but we can eventually start pushing that back up if we start to recapture this 1840 area. But this 1807 level has weakened now that we've tagged it. Let's just wait for some consolidation to see the next potential move up. If we look at Bitcoin, Bitcoin has had some interesting price action as well, because it hasn't really rallied substantially with the markets. The markets have been in rally mode, risk assets, small caps have been in rally mode, and you haven't really seen money flow into crypto. Perhaps it is all of the doubt around many of the platforms like Celsius, Voyager going under, but Bitcoin is still trading in this channel. Short term, you are above the 25 and 50 day moving average. You still are holding this original breakout zone, but you're starting to run into resistance, and you can see this by wicks over here, a wick over here, and a wick over here, all basically within that same vicinity. It just so happens to be around that 25,000 level. We didn't quite hit that 25,000 level, came very close, but just shy, about $60 off. So is that the top in Bitcoin? It potentially could. We could potentially start now looking to trade below the downside of this range, especially if the indices start to fall lower. Let's touch base on the US dollar. The DXY, let me just adjust this chart. So the DXY isn't a support. You can see this major pivot here in May, all of this chop over here, your original consolidation and breakout zone, and now you've come back and retraced. The big question is in the short term, we've now broken the 50-day moving average, which is yesterday, but we have not confirmed below it because we have recaptured and still closed with inside of this wick. And you can clearly see this longer term parallel channel is going to be major support. This has been, over basically a 9-month rally in the dollar inside of this channel. So naturally it's going to take some time to break. Even if you break that into the channel, then you run into this original consolidation and breakout zone. and all of this consolidation breakout zone, pivots. So tons of support in the US dollar over here around the 103.80 to 104.70 level. So I don't think the dollar is going to break down that easily, which could mean that there's more pressure on the markets in the short term, especially if the yields rise. One thing I want to discuss is congratulations on the profits today. We sold our NEO for basically 15%. You can see this beautiful. And one of the reasons is just because yields were rising. I did not like the correlation that was happening in so-called these risk assets, despite I love NEO's chart pattern. This type of pattern is actually brilliant. You've had this major base put in here, almost looked to be a cup and hand, or an inverse head and shoulders here, which kind of even took another dip lower, just forming more of a base. And now you're putting in a series of higher high, and this is actually a short-term bullish breakout. Now you haven't confirmed, but you can see we bought down here at $19 and we sold around this $21.85, this red line. So lovely profit. It has reversed substantially, so we've already saved about 5% just by selling at the correct time of day. So beautiful job on our NEO profit there, NIO, tomato. We also covered our Pfizer short. So healthcare has been really weak. Let me just pull up the right Pfizer chart. So we also covered our Pfizer short. We shorted around this 53 level mark, and just to recapture why we shorted, remember we were watching a couple channels. So we were watching this downsloping channel over here, which connects a pivot to your breakout, to a major pivot, which connects your pivot high all the way to this pivot. So we shorted right up here. You've had some faltering price action, retest, and more legs down, but you're making this stair-step pattern down. We believe you come up a little bit. Maybe we'll look to reshort if the healthcare starts to move more defensively as risk assets like tech start to sell off as yields rise. So we could potentially see money flow back into healthcare. Just in the very short term, I still think they go lower. You have broken a key wedge over here that we were watching. Basically, the next level I'm watching is this wedge pattern over here. When will that coincide with this parallel channel breaking? So you can see you still have basically a couple months that you could chop in this wedge. You'd be surprised at how accurate price action can chop inside of a range, especially one that is a little bit longer where the price action has been trading in for a while. So let's just continue, but this is overall a bearish pattern. This type of formation in healthcare does tend to have a move and a breakdown lower. So eventually you will break this orange line and then head for basically what I think is this massive gap fill around 43. And then if the economy and the recession gets really bad in the bear market at the lower lows, you could eventually see Pfizer down at this 38, 39 level, maybe in 2023, catching a nice bounce and relief rally. But there's going to be tons of bounces, but I just wanted to take our double-digit gain percentage. We are also back in natural gas. I'll touch base on oil as well. But basically, let's look at natural gas. We have been extremely patient with natural gas. These were the two trend lines I was watching. This was your first one, using your pivot high to basically chop a close, another pivot high, and then your through candle over here. And then we wanted to adjust it to the high pivot over here, which was your little bit of a reversal signal in natural gas that had a small retrace of this original topping tail. And look at that. That acted to be a beautiful resistance line. So far, we are slightly in the money on KOLD. I mean, there's nothing to rave about yet. But now the next level that we're going to watch is that one. So we kind of have like a few levels of resistance here just based off of how you draw your trend lines. But overall, we have tagged resistance. We're now accumulating. You're at an extremely high level here where natural gas did see a reversal down here. You also saw a breakdown around this 870, 885 level. So you saw a breakdown here at this level. You saw a breakdown over here at this level. A third breakdown over here at this level. You also saw a breakdown here at this level. So this is the fourth time you've seen a breakdown in natural gas at around this level that we're shorting at. And it's just a starter position. If in the event that this pattern starts shooting up on fear and goes higher, I'll have no problem accumulating more around the double top. And then especially if we, head to the top of this channel. And honestly, I'm getting the feeling that we could potentially have some wild price action again in natural gas. I think there is a potential that we could see some sort of a big sharp rally, maybe actually piercing that $10, because we've never actually pierced that $10 level. And that was kind of the level that everyone, was calling for and expecting in the short term. I mean, I heard analysts saying 25, 50, which is absolute craziness. But oh well, people are going to forecast what they're going to forecast. You just have to read the charts and see where the overall likelier picture is going to be. And frankly, when there's tons of resistance up here past this double top zone, accumulating a short position and expecting a natural pullback is very, very, very wise to do, in my opinion. Let's take a look at the WTI Oil. Oil is very interesting as well because we've been discussing this retrace. We covered our short down here at this support line. This parallel channel is a thing of beauty. We exited our CEO for a lovely gain. And now look, it's basically back up to an important level here. So one of my reasons I said I was going to start potentially shorting oil if it got to this level. But I have not decided to pull the trigger on oil. I did pull the trigger on natural gas. So we have some energy exposure in that sense. But I did not short oil. This is my logic around it is we've had a beautiful, powerful move. And you have had, essentially, options X is the thing that is going to scare me. Because the midterm election bias has basically come to fruition with gas coming significantly cheaper, almost hitting that 85 level. I think you're going to have a bigger bounce here, potentially up to this $99 level before the next leg starts to go. And I think there's going to be a lot of price action in the sense that there's going to be potentially a lot of manipulation, and there's a lot of puts on oil right now that should point to lower prices. So I think the fact that there's probably, from what I'm looking at, a likelier scenario of put action being paid out if it was to head lower. I think the bigger max pain level is if oil actually starts to go higher in the short term. Now, I'm just completely speculating here. There's still a lot of time over the next week and a half that could change the price action, but I'm looking to short oil up at this level, the $99 or $100 level. That's my big level that I think I'm willing and comfortable to short oil again at. So that's kind of what I'm expecting and anticipating. We do get a little bit of a float, but overall, I still think we have to eventually meet this $85 level and then around the 76 as well at the lower end of the range. So yeah, overall, great day. Congratulations. We'll have to continue to monitor things and see how they progress. I do believe oil can catch a bid if the US dollar continues to remain weak as well. So let's just continue to see if things progress. Oh yeah, we did pick up a position as well. Pan American Silver, they got crushed today on earnings, and we picked up at this 773 mark, this green level down here. Just look at this collapse in Pan American Silver. So let me just adjust this chart over here to meet that pivot. So this chart is interesting. Let me go to the weekly time frame because this is a bigger time frame level. So we've had a massive retrace in Pan American Silver, all the way from 38 down to basically 18. And this is an important level in my opinion because you're coming into some major pivots. You can see, look at all this pivot over here. Major pivot in 2007, major pivots over here, major pivot of support and resistance before breaking lower, major pivots. And this was kind of your final retrace where it was the struggle between the bulls and the bears recapturing this wide range red bar in the sense that you were starting to take the majority of that bar over. So since they recaptured that level here, and you have a major pivot zones all the way dating back 2017, 2016, this is nasty sell-off. Yes, it could go lower considering earnings just happened basically yesterday. But generally, you want to let a couple days pass. I decided to pick it up just because I do think this is somewhat of a massive capitulation. There's not many times you get this amount of selling without a natural bounce to occur at some point in time. For instance, over here, you had a massive level which signified a top, but generally you can also use higher volume inflows to signify a near bottom. So just like this higher volume inflow signified a top on this candle here, it's likely that you see a potential near reversal since it's swung so far to one extreme. The mean reversion happens, and I love trading with the theory of rate of change in mind, especially as a swing trader and a day trader. Rate of change and mean reversion, those two concepts are essentially our biggest and best friends. And look, we're already in the money on our Pan American. trade. So tons of support here. If you go to the larger time frame, so the weekly, which we're looking at, I want to discuss the monthly. If we go to the monthly, one of the things that impresses me is this monthly bottoming tail alone. So typically on the larger time frames, you will see, especially since we got a bottoming tail, which signals your reversal in price action, you generally see a retrace, a meaningful retrace of the bottoming tail. Look what we have had. Have we not had a success? Would you not, if you were to look at this as a pattern at a technical analyst, this is what you call a meaningful retrace of the bottoming tail. Typically, you'll see a 50% retrace. Typically, you can also see a 618, and this is just slightly more than a 618, I would say, in my opinion, which now leaves you to the suspect that in a likelihood that you're potentially going to be forming a potential base. Maybe you go a little bit lower and pierce this bottom, but the big question is, once this monthly candle closes in 20 days, is it closing below it or is it closing above it? So we'll have to wait and see. We have 20 days left, but that's the signal. This monthly bottoming tail, reversal bottoming tail, is very powerful and should be respected in such until it's proven otherwise. So a massive rate of change dump over here on extreme volume into support. You have a daily bottoming tail here as well. So the question is, let's see if we hold this major technical level. But I think accumulating Pan American Silver, especially if silver will likely have a rebound in price, and it looks to be moving, in the right direction. It did have a reversal today, but silver's also at major resistance. It's starting to flirt and tag with this resistance, but it is holding its own very well, and so far you're doing what's called bullish inside bar consolidation. So that is key. The fact that you've hammered on it a few times and you're still holding bullish consolidation above a key moving average, that is critical for silver if it continues to move higher. And if silver gets a short-term breakout, you could start to see Pan American Silver really rebound hard. And eventually Pan American Silver is going to rebound. I think just due to the fact that the business of mining has really been hit hard in the sense of the inflationary pressures from energy costs and being directly hit with inflation without really, and the fact that the US dollar has been so strong. That puts a big impact on the companies like this. They have major headwinds, and especially when the price has been in a clear downtrend. But overall, I do think that silver is now at a level, and gold too, that it's going to be showing more relative strength in comparison to the market. So, summary, yields, that's the big thing that we're watching. Yields are going to dictate what happens next, in my opinion. Assets will have to go through compression. And the scary thing is we haven't even seen earnings compressions yet. Okay, so valuations have compressed, but earnings compression has not commenced yet. A lot of people were thinking it was going to happen this earnings season, but it's likely it's the next earnings season. So, into the last quarter is going to really be tricky and dicey, in my opinion. Not for us. We're going to try to be positioned for the right side of the market. As long as we keep reading and trusting the charts and using position management, we should be A-okay. Thanks again for all being members. Please give this video a big like down below and a comment.